तुम सुबह 5 बजे का अलार्म लगाते हो, राइट? वो तो टेक्नोलॉजी है ना, बच जाता है सुबह 5 बजे। उसके बाद दो ऑप्शन होते हैं, स्टॉप और स्नूज। तुम स्नूज करके सो जाते हो, फिर वो 5:10 बजता है, 5:20 बजता है, फिर 5:30 बजता है। तुम अगर फाइट करके सो जाते हो, फिर आराम से 9:30 बजे उठते हो। तुम्हें लगता है इससे कुछ नहीं हुआ, इससे क्या ही फर्क पड़ेगा। तुम्हारे कॉन्शियस माइंड में कुछ नहीं हुआ है, लेकिन तुम्हें पता है तुमने इससे अपने सबकॉन्शियस माइंड में क्या मैसेज दिया कि तेरे से सुबह उठा नहीं जाता है और तेरे को महीने का 5 लाख का इनकम चाहिए। अगर तू टाइम पर उठ नहीं सकता तो तेरे पास 5 लाख की इनकम कहाँ से आएंगे? और तुम्हारा सबकॉन्शियस माइंड तुम्हें सपोर्ट करना बंद कर देगा। और यही सबसे बड़ी प्रॉब्लम है, बड़ा तुमसे होगा नहीं और छोटा तुम करोगे नहीं। बस यही फंसे हो यार, और तुम अकेले नहीं हो, ऐसे तुम्हारे जैसे बहुत सारे लोग हैं। पता है सब ट्रेडर क्यों नहीं बन पाते? क्योंकि हर किसी को अपने पैसे 2 महीने में डबल करने हैं। अब 2 महीने में पैसे तेरे से डबल होंगे नहीं और एवरेज रिटर्न तू कमाएंगा नहीं। लोग जिम क्यों नहीं जा पाते, काम क्यों नहीं कर पाते? सबको बॉडी चाहिए और 2 महीने में चाहिए। अब इसको सॉल्व करने का एक मैजिक बताओ, ड्रीम बिग, स्टार्ट स्मॉल, एक्ट नाउ। ड्रीम बिग, जितना बड़ा सोच सकते हो सोचो। स्टार्ट स्मॉल, छोटे से शुरुआत करो। एंड थर्ड इज वेरी पावरफुल, एक्ट नाउ। अब तुम्हें समझ आ गई तो ठीक, नहीं तो
This is the only liquidity video you are ever going to need. I'll show you exactly what liquidity is, how to frame up, how to choose the correct liquidity pools, and most importantly, how to build a trading style around liquidity. So stick with me to the end of this video and you'll find out how. Okay, first I want to walk you through the 4 different types of liquidity that I deem the most important and that I take the most consideration in marking out when I'm trading. So the first one in the top left-hand corner is relative equal highs or lows. And ultimately, to understand liquidity, you're going to have to understand the psychology behind traders. So think about anything, right? If you look at this scenario in here right now, what do you think is happening? As prices going down, people are looking to go short. Where do you think those people are going to place their stop losses? They're going to place the stop losses at logical levels. They're going to place them at highs, right? That's essentially how relatively equal highs get built. And at those highs, a bunch of stop losses sit in those areas. So liquidity is just another word for money. And money in the markets is just in the form of entries or exits. Pretty straightforward. So buy stops, sell stops. So there are a bunch of liquidity at these highs because anyone watching price go down, putting orders, stacking orders, or even limit orders, where are their stop losses going to be? They're going to be in the most logical and protected areas. It's just human psychology. We all typically put our stop losses at highs or lows. Again, if we take a look at option number 2, which is previous highs and lows, if you see market trending in a certain direction, where do you think anyone that's getting involved in buying is, right? Anyone that's buying in here or buying the breakout or anything of this nature? Well, on the breakout, you're going to have liquidity because you're going to have buy stops. How many traders are there out there that trade breakouts? When an old high gets broken, they enter the market. Where do those traders put their stop losses? At the previous low, underneath that previous low. That's just how all traders are taught to think. Put your stop losses in logical places, usually at highs or lows that make sense. Very rarely do you see traders just put a stop loss in the middle of a price leg because everybody's thinking the same thing. The probability is that this high is protected and price will continue. And so especially this is how trend lines get formed. The longer that a trend continues, the more dangerous it becomes. And that's why I don't think that trend lines are a solid strategies, because ultimately by the time you see a trend line form, there is enough liquidity in there for the market, for the algorithm to want to go and seek that liquidity. So old highs and old lows are a specific area of liquidity that I'm always keeping in mind, but these two are my favorite. On the left hand side right here, we have session highs and lows. And just for this example, we'll go deeper into the charts when I walk you through an exact trade breakdown using liquidity. Here you can see we have the Asia session range, one of the most formidable areas of liquidity in the trading space. Again, very, very high probability that price will sweep one side of Asia coming into London and then take out and prime out for a London reversal. This is one of the trading models that we trade. The next one, so just to reiterate, every high, every session high and session low will have a pool of liquidity sat at that session high and at that session low. And typically speaking, the previous session loves to go and take that session liquidity. So for example, London loves to take Asia and New York loves to take London, right? And the cycle just repeats. And then one of the most important areas of liquidity that you will ever trade is the previous day high and low. Why? Because oftentimes price will either take out obviously one of the highs or lows of the previous day, depending if price is expanding, contracting, or ranging. Now, the reason that this is such an important area of liquidity is because you can frame amazing trade setups based on the previous day high and low liquidity when you factor in the trend. So these are super, super important areas of liquidity. And now I'll go to the charts and show you exactly what those areas of liquidity look like on the charts. So here we are on the M15, and what I'll do is I'll walk you through the settings that you can use for each area of session liquidity. So in UTC -5, which is New York time. So what I like to do is set my charts up in days. So you can see we have Wednesday is its own day, Thursday is its own day, Friday is its own day. And the reason behind this is because I can very clearly see, if I look at Thursday, I can instantly see what? Well, this was the low of Thursday, right? This was the lowest point of Thursday. So I know that this is Thursday's low. Again, where's Thursday's high? Thursday's high is here. And what's also there? Equal highs, right? So it's very nice to have the day set up, because those previous days liquidity are key to trading, to framing trade setups for sure. In the blue box here, we have the Asia session range. Now the Asia session range is from 8 till midnight, right? 8 until midnight. UTC -5, so New York time. Everything is in, I believe it's EST, Eastern Standard Time. So we have 8 till midnight for your Asia session. And again, Asia is a key area of liquidity. I'll show you 2 examples right now. This is such a common thing that occurs. And again, go and test this for yourself. Don't just take my word for it. Look at Asia, right? So many times can you frame a reversal on Asia. The Asia lows, what happens? The Asia lows get swept, right? Just as Asia finishes, heading into Frankfurt, Asia lows get swept. You can just look for a shift in here, fair value gap, trade into this Asia session high. So many times will you see before London or during London, a run of the Asia lows and then the Asia highs. Most of the time, both of the highs and lows of Asia get round. Let's look at the previous day, the day just before that. What do we have? Here's the Asia session in blue marked out right here. What happens? Asia finishes, and within 60 minutes of Asia finishing, we sweep the highs and then what? Go straight for the lows. Super, super key trade setup is that sweep. Again, if we look at Tuesday, doesn't happen so quickly in this specific day, but what do we get? And this is what I based one of my setups on last week. We have Asia highs. What happens? Sweep into those Asia highs during London session. Price fails to break the lows, creates equal highs to the downside, and then what happens? Then price goes and takes out Asia session high. So we have a sweep of the lows and then come back for a sweep of the highs. And I trained a sell off of that sweep, because usually up on the sweep of a high, a session high, we had London, we had Asia, off the back of a sweep, it's very high probability that price will ultimately reverse. Let's go and look at the previous day, Monday. Again, what do we have? Asia session right here in blue. That's our Asia session high. What happens? London opens, sweeps into the lows. Then what do we have? We have London highs, right? London open highs and Asia highs. And what happens? Price comes, sweeps the highs of both of these with the relative equal highs, and I just wait for a shift and get involved, right? That's another trade setup that I took on Monday. It's pretty similar to the exact same trade setup that I took on Tuesday, just a lower risk to reward. And so you can see that that setup gets framed a lot because it's a super key area of liquidity. Now, the next that we have is just the London Open, right? London Open 2 till 5. It's supposed to be 5. It's cut off at 4:45. Let me go ahead and change that 2 till 5:15 because that'll make it 4:05. So again, if we look at the London Open session, right, the first few hours of London, where a lot of the volume comes in, these highs and these lows get used as liquidity. And again, if we literally just look at what happens, we run the highs and then we come for the lows. And so these session highs and lows are super, super important piece of liquidity. And what you can do is you can begin framing trade ideas based off of the run of a high and the reversal, which I'm going to show you at the end of this video, an actual setup using the logic. So that's our session. So yeah, you can go Asia session 8 until midnight EST. Then you can go 2 a.m. to 5 a.m. for your London Open. Then you can go New York AM session, which is, you know, your 7 till 10 window. And then you've got your London close, which is from 10 till 12. Again, all of these are EST times. They're supposed to be 12. And you can just look at how price reacts to these session highs and these session lows, right? Look at this low right in here. What happens? Price comes up, sweeps an area of liquidity of high, sweeps an area of liquidity of low, and then what? Sweeps the highs, sweeps the equal highs, right? It's everything about understanding and framing these liquidity reversals. So heading into Friday, and in fact, I'll just take you through the previous days, highs and lows, real quickly, because there's an important thing is you can't just trade liquidity alone, right? The most important, most fundamental framework for anything is market structure. Being able to identify market structure, its flow, being able to understand where the market is coming from and where it's likely heading is what will give you the real edge. So at the end of this video, I will actually give you something on market structure completely for free. So what do we want to look at? Well, if we just look and zoom out for a second, is it not clearly obvious that GU is in this heavy downtrend? What are we seeing happen here? We're seeing the daily highs, right? Daily high up here, respected. There we have a daily low. And then what happens on Tuesday? Price does not go and take out the high. Price comes up and does what? At the end of Tuesday, it takes out Monday's low, right? Or near the end of Tuesday, it takes out Monday's low. And then if we look at Tuesday, we see that we have a Tuesday high up in here and a Tuesday low. What happens? Wednesday takes Tuesday's low, then reverses, doesn't take the high. And then what happens? Thursday opens into a run of Wednesday's lows. And it's just the same thing. You can see all week we've just been taking the lows because we're trending down. We're bearish. I already have that bearish bias because of our higher time frame also. A higher time frame also indicative of lower prices. So just stacking up these confluences will give you an edge. It essentially enables you to see where the market is headed. So when I'm coming into the market on a Friday, what do you think I'm looking at? Number one, market structure. I know that market structure is bearish. Market structure is heavily bearish. And so when I come in on Friday, what I see is we have the previous day low on Thursday, along with the London close low, two major points of liquidity, creating what? Relative equal highs, relatively equal lows, sorry, as we covered in the first portion. So we have relatively equal lows, we have the previous day lows, and what do we also have? At the moment, this is the low of the week. It's the current low of the week. So there's a huge magnetism toward that level. Price wants to go there to collect the liquidity that's sat below this low. And again, interesting, what happens on Friday? Friday opens with a sweep of these equal highs, right? Because what you have to understand is if price is not continually taking highs, it's respecting highs throughout the week, there's going to be a bunch of liquidity sat in the area. So what does Friday do? Friday opens with what? A huge run on all of the stop losses, runs on these equal highs, runs on this previous day high, runs on these equal highs, runs on this high. I think it respects this the previous Wednesday high, but runs on this liquidity, runs on this liquidity, runs on this liquidity, runs on this liquidity with aggressive momentum, and then begins to what? Come back down. And then we begin to range. And then inside of London, once again, London opens bearish, right? So price has fulfilled its obligation. All of this liquidity is now taken. Where is the liquidity? It's on the downside. Previous day low, relatively equal lows. We have the London close low. We have the current low of the week, right? So this is a huge pocket of liquidity, but not just because it's a pocket of liquidity, but also because of the macro market structure, because of where market structure is heading overall. So market structure is obviously our first understanding, and then we frame in liquidity. So how do we incorporate this into a trade setup? Let's go ahead and take a look at that. So let me go ahead and clear all of these drawings in here and make it super, super simple. So Friday, what do we have in here? Again, I'll even pull price back till before we even run the highs. So we have Asia session, which ranges, doesn't take the low, only takes the high. Doesn't take the high, only takes the low, and continues lower. What do we have here? Previous session high. So we have our previous daily low and relatively equal lows in here. So we have a bunch of liquidity. We're bearish. We've just taken all of the liquidity to the buy side. Now price is heading back down. What do we have? Premium area of liquidity. Just above that premium area of liquidity, we have a beautiful looking order block. And so what I want to see is I want to see a run of these highs, then a lower time frame shift, get involved in here, take out this session low as my partial 1, and then the previous day low as my partial 2. I'm literally just want to trade in alignment with the highest probability directional flow of the market. It's actually that simple. Like, it's not complicated. So what do I want to see? Before I even begin looking at trade setup, I want to see a run on some sort of liquidity. I want to see a shift of market structure. I want to see a nice area of supply, and then I'll get involved in the market. And until that happens, I sit on my hands and I wait. So that's what I want to see play out. Let's fast forward price a little bit and see how price plays out. So price sweeps the highs with aggression, so it closes above there. So price is probably going to go a little bit higher. Price then comes into our point of interest, gives an initial reaction. So what I want to go and do now is I want to go and look on the 1 minute time frame. I need to understand what is my lower time frame trend looking like. Super, super important point. So I know that if I look, the most recent swing points is this low, this high, this low, and then what happens? Price comes all the way up here. So that is the current trading range, right? So I would need to, for me personally, see a break of the lows. Doesn't make sense. So looking at that, what I need to see is I need to see one more run of the highs and then a break so that I've got actual market structure to break. If I don't see that, I don't trade. It's that simple. So what do we get? We get that run of the highs, right? So we get a break of the highs. Okay, if we just fast forward, we get a break of the highs, and now I have a new low because I go higher high, higher low, higher high. So for me to get involved into the market now, I need to see that not only has all my objectives been hit, but I need to see in real time the order flow shift. For me, there's no better time frame than the 1 minute time frame when it comes to looking for a trade entry, because you are literally watching the actual flow of orders come into the market in the present moment, right? It's plain and simple. If price shifts these lows right now, there is an abundance of more volume of sells than there are buys. Thus, price will go down. It's just logic. And so we need to see the shift of these lows. So I want to see a change of character to the downside. Otherwise, I'm not getting in. And it's that simple. And so we get a run of the lows, but that's just a liquidation. Now, full transparency, what do we have here? Equal highs, right? I was a little bit reluctant of that liquidity, but I had taken into consideration the fact that this is a very important distinction for you guys to make. Higher time frames have a much larger bearing over lower time frames, right? So like if the higher time frame is bearish, right, and the lower time frame is bullish, and we get to some sort of premium area, some area of supply, you do not want to keep longing just because the 1 minute is bullish. The higher time frame always takes the precedent. So the probability is that price will shift and you will continue moving lower. That's the probability. So when I look at these equal highs, part of me thinks, yeah, there's a possibility that I could get swept. And that's okay. I'm okay with taking that risk because I also know that we've taken a major area of liquidity. We're in a premium area of supply, and the major areas of liquidity over here have been taken. The only liquidities that literally sit left is the lows down here. So I'm totally fine with taking the risk of losing a 1% in order to gain whatever the risk to reward will be. More than happy. So we get a liquidation. We don't get a close. I need to see a close below those lows. Then we get the close. So at that point, you're good to go. Area of supply in here, right? That would be the key area that I'd be looking for. But again, super important distinction. What is this at the same time? It's a swing high, right? It's a previous high. So we have to look at that for what it is. And this is how I would frame the setup. When it makes sense, when you have the room, look at this, right? Even if I was to cover the 15-minute high, that's only an 8 pip stop loss. If I was to cover just this, that would be a 2.5 pip stop loss. You must be crazy trading with a 2.5 pip stop loss. Something that I tried to do many times ago, which is, never a good idea. So if I can cover this high up in here for a 5 pip stop, give a little bit of breathing room, 5.5 pip stop, I'm able to cover the actual structural high. That increases my probability drastically by staying in this trade. And so if there's any piece of wisdom that I can give for you guys that are struggling right now with always getting stopped out, it's make your stop losses larger. Cover more logical areas of prices instead of these internal lows that could be liquidity, especially when you already have an area of another area of supply up in here as well. Make your stop loss larger, go for a lower risk to reward, but it's still more than enough. My first partial take profit has to be at least a 1 to 5. So what I'll do is bring this down a little bit, 5.4. That gives me a 1 to 5. I'll take half of my position off at that 1 to 5 and let the rest run for the major liquidity point of previous day low, right? 1 to 6.83. So that's basically framing the trade setup based on all of the confluences that we've just stacked together. Now we do have red news event at 8:30. So we need to be in this trade and break even within an hour. So price tags in, and the moment that low gets shifted, I'm break even, right? The moment that low gets shifted, I'm break even. We have an hour till news. Put my stop loss here. Even with a little bit of slippage, I'm cool. And yeah, just understanding liquidity. The likelihood is that this news could potentially be a catalyst to push us into the direction that we want to go in. Why? Because news is just a Trojan horse to take price where they want to take price to. Plain and simple. And so, yeah, price plays around. comes all the way back up, thought it was going to be a break even, and then price continues. Again, just structural. Price is just respecting structure, completely logic, right? And then aggressive. News hits, maybe you were in the trade, maybe you were out the trade, either way, news hits straight through your take profit. Now, if you want a completely free course on market structure, every lesson that I have to teach on market structure, completely free course, the link is down in the description, no strings attached. Enjoy.